Yesterday was the biggest week in Bitcoin's history, closing above key support levels of $93,000. But in the last 28 hours, Bitcoin has dropped $10,000 from that high. So what the hell has happened to our imminent blow off top? So don't go anywhere. We have lots of data to cover and lots of questions to answer for the stock markets, for the economy, of course, the real estate cycle, Bitcoin, and the beloved degenerate altcoins. Like, subscribe, share the content with a friend. Let's dive straight in. BTC, 95,000 was the top, now down to 85,000. And as I'm recording this, attempting to close above 86. The key level that I'm looking out for here is around $87,000. It's above the previous tops and should put it into some sort of very short-term strength, provided it's able to close above that level. The idea here is that we've given back all of the gains from the Trump pump, essentially a sell the news event. The market pumps up and it dumps. This is basically the third time that this has happened. We had it obviously once in the last 24 hours. We've had it at the inauguration, and we've had it a couple of times in between. Also, the Trump election has become a sell the news event for the stock markets, which leads us now over to the stock markets before we come back to Bitcoin. I just want to explain what's going on here, at least, of course, in my opinion. So the fear and greed index for the stock market in the last 24 hours is higher than yesterday's reading. However, the market went lower. So there might be a bit of a base attempting to form here. Does that mean that the exact low is in? Of course not. To me, it's similar to what we've discussed over the last several years when it comes to these significant lows. So I'm not trying to call the exact low, but get an understanding of where these lows might be. And so that can be a little bit of time away, just like what happened in 2022. We saw some key signals that suggested that June was going to be a low in the market. Yes, we got a solid rally here, but then the markets went down into a lower low in September and October before bouncing pretty well out of that point. Yeah, it took another few months of sideways consolidation with higher lows forming on bad news. So you got some higher lows with very bad news, US banking crisis. The debt ceiling crisis came up a hell of a lot in April, May of 2023, and then the market broke out. So what I'm suggesting here is that we might be tracking around some sort of low, and the low points that we've been looking at could be further down on the price chart. So what the market seems to be doing now is just putting in a lot of fear. At this point for the last 2 days, we've had extreme fear at 19 and then extreme fear at 24. So there has been less fear, even though the S&P 500 did go lower. It closed lower than the Friday bar, and you had some pretty significant volume, just slightly short of what happened in February there. February 28th had higher volume. Now we had slightly lower, but still overall very, very extreme volume here. Another interesting thing to note on the short term is that it was unable to break the 13th of January low thus far. And of course, this is all short-term info. We have hit the 100% level, 150% level of the double top that we've been watching. So another good area for a potential temporary bounce. Now, the exact same thing just happened for Bitcoin. So we're watching the double top, and we saw the market come down. It hit the 50%, held out, came back to the 100%, broke down, and hit the 150 before bouncing from that point. The point of the signals and these indicators is to attempt to identify and basically put the probabilities in our favor that there might be a turning point coming up. And that's exactly what happened with this turning point. On top of that, there was the 50% level. So I show you that again for BTC because of what is showing up here for the S&P 500. At the moment, it just increases the probabilities. Doesn't mean it's going to exactly happen, but it just increases it. And it's interesting to see the amount of fear that is gathering pace around this price point. Now to the downside levels, we're looking at 5,800 points. Just yesterday, closed at 58.21. Should that break down, there's still more levels here at 57, the 50% level at 5,643. And then if we have to keep going even further, we're looking at 5,400 points And then the key level that is basically my anchor point for this macro cycle is back at the August low at 5,100. So in amongst all of this fear, what's happening, or at least what are the markets saying is happening over the last 24 hours? Basically, Trump is moving the market around with talks of tariffs. And what we're seeing is the news channels like Fox here is producing a ticker symbol showing the markets dropping as he talks about tariffs. So I think this is all starting to get a little bit too much. Now, the interesting part here is that often when we see these sort of situations play out, a lot of fear, a lot of talk, you see a lot of people in comments, whether it's on X, whether it's on YouTube, they start to get very, very emotional. This is what's happening. That's what's happening. This is wrong. That's right. It just gets very, very emotional. That sort of language that's being used. But what we've seen in the past is it's often around some sort of turning point in the market. It could be a peak where people are getting very, very excited. And of course, the flip side is a lot of this fear around the lows. You just look at the language that's being used through here. Fox is now displaying tickers showing the stock market tanking while Trump is talking about tariffs. Now, it seems like everyone is trying their best to try and call a top rather than just follow the market up. Look for key turning points in the market that would call a longer term trend change. And in this case, the trend is up, therefore the trend change would be down. But everyone's trying to do this within a few percent of the all-time high. Now, we've got a slightly different story in Europe. So in the US, things are going down. They're putting their tariffs on, or they're talking about tariffs, and they talk about taking them off, and so on and so forth. And I'll come back to Trump in just a moment. But in Europe here, you got a new all-time high for the Euro Stock 50, an all-time high for Europe. Didn't Trump just have a go at Europe and tried to rip them apart with the UK and so on? Here's the UK, new all-time high. Yeah, that bar doesn't look great, but you've got a new all-time high on the price chart here. The day before was also an all-time high. Is this going to last? Who knows, right? But he was ripping them apart. Why is the stock market also going up at that point? The DAX, the German market, new all-time high. That's a little better close than what we saw for the UK. France touched a very close to a new all-time high. You can see it's just a couple of points off that. Strong day there. Slightly weaker close on the daily there. The Dutch, they're having a little bit of an up day here. And China also tracking around the same sort of price ranges that it has been for the last couple of months. So the way I'm reading it is that there is still a lot of uncertainty, which is breeding the fear, and the fear is intensifying. Just how much more can it go? Well, there still seems to be a bit of room to the downside for the fear to increase. On top of that, you're seeing the US dollar also come down. It's had a couple of days rise here, but the volumes just increased on the way down, closing underneath the 50%. Remember, this has already checked off our boxes for the overbalance in price and time, which is a trend changing signal. The next two that we need ticked off here are the break of the swing. That's back here at 105.4 and the 50% level at about 105. So once we get those two boxes ticked, then that means the US dollar is most likely, very high probability, that the top is in at 110 and that you're going to continue to see this thing come down, just like it has done in each of these longer term moves here, like from 2022 and a couple of those in between through the last couple of years. If that's the case, well, then we continue on with our 18-year cycle, winners curse phase, markets heading up. And if this is all just part of Trump's ploy to upset the market early in his presidency, well, then we could really see things push higher later in 2025, which of course I've got that data to have a look at with you as well. This is the logarithmic chart of the S&P 500. Again, it's just pushed off these highs multiple times, still slightly higher low, but plenty of support levels underneath. And as I've talked about before, I think if this is able to come back and push higher, that's obviously my view based on the cycle. And this is all part of the volatility at the end of a cycle. Trump is a master of bringing in that volatility. Then I think these lows that we're going to see in the first half of 2025 are going to be some great opportunities for those investors who are savvy with their investments. I can't say that you have to buy, but I'm definitely erring on the side of watch these markets through this period and don't get scared out of positions when there is so much fear in the market at these types of levels. In addition to that, we're looking at the composite cycle. Just a reminder, if you haven't already, hit the like and subscribed. This is a thing that is working out very, very well so far for 2025. The cycles, stick with it because these are annual cycles. It takes a lot longer than the day-to-day action. People trying to call the market one day to the next, and it doesn't necessarily work out like that. As I said, with Bitcoin, looked pretty damn good. And then we see the reversal there. So there's a bit more grinding to do. I'll get to Bitcoin in just a second. But in terms of the cycle, here it is, first quarter. You are here, April, May, June, potentially some good upside. Don't worry so much about how big that is. We're just looking for the momentum and the swing itself. The movement of the swing is in an up direction, whereas now it's basically in an uncertain pattern, and then looks like another uncertain period somewhere around quarter three. On top of that, weakness early after a 20% gain. So again, just a reminder, because of the fear that's in the market and the calls for recession based on what Trump is doing with Canada and Mexico, and then into Europe, so on and so forth, right? The point is to remember what the overall pattern and cycle looks like. After 20% gains, weakness early in the next year, which is now, is normal. The past 20 years, a bottom in March is common. Okay, we're in March, and I'm talking about the S&P. I know people start to think, but you said Bitcoin. Maybe there is one for Bitcoin, but we're talking about the S&P. That's the leader here, the leader. The Carson cycle composite looks like a proprietary composite of various cycles, similar sort of thing. February, March, start to get a bit of a trend direction later in March. And this one, super interesting. S&P 500 after it's down more than 1.5%. So we saw that, then up 1.5%, then down 1.5% in the past 3 days. What happens 12 months later if I move my head out of the way? 25% increase 1 year later with an 86% hit rate. Now, of course, that's the average. We're not saying that it has to be the average. There's some pretty big, massive gains, and that's all due to the 2020s when this signal came up. Big volatile swings around COVID, if you remember, tons of fear. What happened to COVID? Well, it was a freaking massive low in the market, and the markets took off in 2021. And so if you take these numbers here out of the average, well, that of course is going to drop the average because this obviously isn't a COVID dump. But in terms of the way humans are reacting to certain things, it seems like we're in a similar-ish time. Not to say that the dump is going to be the same, but it's the emotions. You're seeing a lot of that fear around these times. Everyone's trying to capture the fear and say the markets are going to go much lower and the top's in. We're coming to an economic major slowdown and crashes are underway. It doesn't seem like that just based on the cycles and the data that is coming through that is different to what the headlines, all these damn headlines are saying. You can go on X, you can go on Google, whatever it is. Okay, winner's curse phase. This is the major cycle. It's pretty well self-explanatory. We're up the top here. This gets volatile. I don't know how many times I have to say that, but yeah, basically winner's curse phase is the volatility stage. And I mean, you just have to look at the last few days. That is definitely much, much more volatile than what people would like the markets to be. And the same deal for the NASDAQ, actually. It's been very, very volatile and put in a new low here. Slightly high close, but still it looks like it's got a little bit further to go on the downside. 50% level coming in at around 19,900, and the extension of the double top takes you to 19,700. So watch those price points coming up. Okay, before we get to cryptos, let's have a look at some of the crypto stocks, in this case, MicroStrategy. The theory that I've had since this all-time high came in about 4 months ago is that MicroStrategy is most likely not going to put in a new all-time high. I've been met with a lot of resistance about that because people see this as a leveraged play on Bitcoin. And I say see it as one, doesn't mean it's not, because at times it is a huge leverage play on Bitcoin, 4,000% for the run up, but the chart is just not looking great with breakdowns of 50%. In order to change this, I'm looking at least a close above about 320, and I've talked a lot about the $400 level because of where those tops were. So I think it needs to get at least above $400 to consolidate before it could attempt at that high. Whereas for now, it's very much in the weaker half of both 50% levels, the last run up and the major 50% here, down 57%. And in the last cycle, this basically just led to a lower high towards the end of Bitcoin's cycle, so Bitcoin's top, and it basically gave us a bit of a countdown to the end of, I guess, into the Bitcoin top. So yeah, I don't think the Bitcoin cycle is over yet. I think there's still further upside to go, but in the short term, definitely not looking the greatest after the last 24 hours. So about half an hour to go while I'm filming this. You guys will let me know in the comment section, will this close above $87,000? That's the ideal place, at least just for the very, very short term here for BTC, to attempt to consolidate and then attempt another break past $90,000. The last 24 hours have been extremely volatile for stocks. 8% for Nvidia, a few percent across the board for the tech stocks. Of course, altcoins have also been very, very volatile. I've got that analysis to get into next, but I want to let you know the TIA premium sale has been extended now for the next several hours. A link will be in the top of the video description. And if you want to check out what the members are trading, their returns, their profits here, even in some of the cases of losses, you can get that link in the top of the video description. Check out the free chats here for trading results and TIA reviews, so you can get a grasp and a feel of what people are doing with their short-term portfolios, how they're developing their long-term portfolios, and of course their real estate portfolios as well. The daily volume is heading up, 74 billion. Remember the low that came in a couple of weeks ago in February? This is one of those charts that we're watching to help us with a leading indicator of interest coming back into the markets. Yes, there's still lower highs here over the purple. Look at the purple line, lower highs, lower lows. But ideally, you want to see something start to form like what happened in 2024. Lows come in, and then you start to get a bit of a basing pattern forming and consolidation of the exchange volume. Basically, just something stabilizing here. The Google Trends picked up for obvious reason. Trump talking about Bitcoin, Ethereum, XRP, ADA, Solana. So you saw a couple of pickups here in the last few days. So again, bit of a basing pattern, and just as we've been watching, slightly higher low in the Google search trends. So unless this breaks down and breaks past the previous lows, then to me, this is still just part of the movement in the upside in a longer term fashion, because you need to see some stability come back into the markets after the wild couple of days. Now for the liquidations at 800 million over the last 24 hours, this has been a pretty wild ride here. Many trying to capture the lows and getting wiped out once it pumps and then dumps back in their face. So you got a lot of longs liquidated here. And yesterday, or the 2nd of March data, you had a lot of shorts liquidated basically on that pump. So there's still a lot of interest in the markets. More traders are there getting absolutely smashed. Just a 2% differential here for the longs and shorts. Michael on his channel talks a fair bit about this to identify where some of those low or the turning points can come in when you have such a big difference between the longs and the shorts. If it's too heavy on one side of the market, it tends to flip back the other way. And that's what we saw with the shorts getting smashed. And now the longs have gotten smashed. Now it's heavy back on the short side. All of this action seems to be stemming from a lot of uncertainty in the markets. Everyone trying to capture the low, capture the highs, ride late trends, and you're still seeing a lot of uncertainty, of course, in the US. We still don't have a bottom confirmed for the stock markets, and we don't have a trend change yet for the stock market. So a lot of people trying to catch this thing quite early. Now, over to cryptos, Bitcoin's USDT dominance. Yesterday was looking absolutely fantastic with a close underneath all of these highs. I was getting excited by that, but as Warren Buffett says, and I've showed you that quote before, you got to leave those emotions at the door. Otherwise, it basically rides you silly. I'll leave it at that with my analogy for today. But essentially, we've just seen a bounce on this again. The good news, at least in the 24 hours, yes, the last one was great. This one, not great, but it's still, for the next 26 minutes it's still underneath both of those 50% levels. 50% on the extension, which is the thicker red line here, and then the 50% of the range. So ideally at this point, it still remains under that. It's come back to test those levels because of how abnormal the bar was on Sunday. So I've come right back, tested that. Now, when I turn the volume on, I don't know how much to trust the volume from these type of things, crypto cap, like where the hell is this volume coming from? That is not great volume because we've seen a big increase to the upside again, just like around some of these peaks. But hopefully over the next half hour, we start to see this drop off and you get a slightly lower close here with a little bit more of that cash flowing back into BTC, which has shown to be the stronger out of all the cryptocurrencies, obviously altcoins and Bitcoin here. Now, for the cryptocurrencies, the what's this? Others dominance. Total crypto market cap excluding the top 10, still relatively weak. Yesterday, I checked this one out as a potential starting point, or I guess timing for the end of the cycle, roughly about a year from this low, if in fact this happens to be the low that comes in. Just looking at the two past cycles, you got a low here in December 2020, and it didn't take too long until the altcoins were basically done by January 2022, so about 13 months, and then you had about a 14-month period here of January 2017 into January 2018. So just looking at that higher low, and then altcoins went bananas at that point. So just taking it the shorter time frame here, just 1 year, that's about February, which seems a little bit crazy at this point. But yeah, if you moved it out to the other timeframes that it was able to do, well, that's February and then also March of 2026. So let's just keep it on the shortest time frame here because we don't even know if this low is going to be confirmed after that move up. At the moment, it's basically just been rejected off the previous low. So still, basically all that's saying to me is there's still no real signs of changes in trend for the altcoins. Remember, this is the others dominance chart. Basically everything except the top 10. So it's time to rip apart the altcoins. Look at what's strong, what's weak. And on the weaker side is, of course, Ethereum. This has not shown much strength after yesterday's bar. It still hadn't broken past 2,900, as I talked about yesterday. It needs to get above $2,900 to at least have some sort of strength left in this game. Otherwise, a breakdown of 50%, even in the face of everyone talking about how Trump has millions of dollars of ETH, how everyone or the smart money is buying up ETH, like all of this other talk, the chart just is not doing the same talking. The chart is saying something different. And yeah, with the breakdown here of about 2,000, 2,060, it's probably going to send it somewhere below 1,800. And I don't even want to say these numbers that are the next targets down here in the low 1,000s. We'll leave that for another day because for now it's attempting to hold here, but they are definitely strong targets, something that I don't want to see for ETH. But at the end of the day, the market is doing the talking, not this, I'd say, bullshit that you hear about Trump owning millions of dollars of ETH and he's tweeted about it in coming into the strategic reserve, etc., etc. The chart has basically been down this entire time that they've all been talking about it over the last several months. Same goes for Solana. It's been down after the signals that we looked at since November, the 3-bar rule showing the weakness. That was from key turning points, 3 bars down, 3 weeks down on top of that. And then again from the all-time high after the fake out pump, that was the fake out Trump pump with the meme coin launches, you had 3 weeks down. And now in the last 24 hours, it has, I think in the next few minutes, it'll probably close under both 50% levels, which just unfortunately increases the chances of testing around the 110. The only thing that can save this is if you see another flip back the other way. Speaking of giving it and taking it, XRP broke past the 50%, closed above the top, the previous old high at 290. It wasn't an all-time high, but the high. But then the last 24 hours closed back down. Now, the beauty about this is, or the slight positive, is that it hasn't come all the way back down to the lows at 217 or tried to test any of the swing bottoms here at about $2. So although everything is flushed out in the last 24 hours, XRP has flushed the least with, on the Binance chart, with the least volume as well. So it's great to see that there's not much volume flushing out here or flushing the price down. And hopefully in the next 20 minutes or so, you see a nice strong close here if you're an XRP holder. As for SUI, it bounced and of course is now flushed back down as well. So broke back under the 50% 50% level at 290, and most likely at this point is going to come back and test somewhere around the 240 levels. And as for ADA, it had a big move to the upside, so I guess the flush out was expected, but you've got slightly lower volume here. Extreme volume overall, closes above the 50% at 82 cents, and also above these tops here, which are also around 82 to 83 cents. So that could be a short-term sign of strength. If you start to see it close back under these levels and get rejected at 82, well then you're probably going to see a lot more weakness here, because ADA was unable to break past the tops here at about 115 and close above them either. The last 24 hours have been extremely wild in the markets. Meme coins have been absolutely wrecked yet again. Over 20% in a lot of these cases after they pumped up yesterday, basically giving it all the way back. So stay safe out there. There is potentially still further to go here in the cycle, just based on what I'm getting at with the analysis for the stock markets, but it's not going to be an easy ride. It's going to be very volatile into that period. So if you can survive it, that is going to be better than the majority of people, as you've already seen. Like, subscribe, share the content with a friend, and I'll see you back here tomorrow for what's going on with the imminent blow off top.